M&M 836 crore rupees versus the ET Now poll of 860. So just a tad lower, you'd have to say. Let's just see what the ET Now poll was actually indicating. The profit we were expecting 860 crore rupees and 836 crore rupees is what has come in at. Remember the results, of course, standalone basis, not comparable due to the merger of MADL this fiscal year itself. The sales we're expecting a figure of about 10,880 crore rupees. Let's just wait by and see what the top line picture as well looks like. The top line figure for M&M will just come up for you on your screens, but a tad lower than what the ET Now poll was figuring it to come in at. 860 crore rupees was what our expectation was. The EBITDA margin as well has come in slightly lower this time around, 11.2%. We were expecting the margins to come in at 12.1%. So we were expecting a stable quarter. This has showcased some bit of dip coming in. 11.2% is where the EBITDA has come in for M&M this quarter, and I don't quite think this would be auguring too well for the stock price as well if we bring up the intraday chart. Still awaiting what the top line figure looks like, because we were expecting an appreciation of nearly about 30%. The stock, of course, is lower by about 1% or so. I just have the PAT and the EBITDA performance with me. Don't know what the top line figures look like. We were, of course, expecting a volume growth of about 12%. The total sales, they have come in at 10,774 crore rupees. So that as well is a tad lower than what the ET Now poll was actually pegging it to come in at. The management commentary is going to be acutely important for M&M this quarter, considering we would want to watch out and see what the tractor sales volumes and demand outlook more importantly is from M&M this time around. Navista and Sangyong, the profit outlook as well as the investment plans as well is something that the street would actually look out for. That, of course, is the other income component. The UV segment product pipeline and the impact of rising diesel prices is going to be something that the street would keep a hawk eye on in terms of what the management indicates on all these parameters. So like I said, the numbers largely in line, a tad lower when it comes to the top and the bottom line. But I think the disappointment really is with the EBITDA margin picture, 11.2% versus 12.2%, wherein we were expecting absolutely a stable status quo quarter. 12.1% is what the ET Now expectation was. Let's bring in our in-house analyst, Yatin Mota, to analyze M&M's quarter. Yatin, what led to the dip in margins for M&M?
Well, Aisha, it's clearly, witnessing some bit of margin pressure. Our margin poll was close to 12.1%. Bloomberg consensus was close to 12.5%, and they have delivered a number of 11.2%. So clearly the realizations for Mahindra & Mahindra have suffered. Even if you look at the sales figure, they have come in at close to 10,770 crores, almost 110 crores lower than what we had estimated. Also, the raw material costs for the company have gone up. Their EBITDA has come in at close to 1,210 crores versus our ET Now poll of 1,320 crores. So clearly on the EBITDA front also almost 100 crores lower is what Mahindra & Mahindra has posted. Possibly, given the fact that almost 100 basis points decline in margins has come in versus the estimate, the stock will surely face some bit of pressure going forward as well, because the analysts did not calculate the margins based on higher realization in the UV segment, but that has possibly not happened during the quarter, and the margin disappointment has clearly been there. Possibly you could see some bit of cuts coming in as far as the stock price is concerned today.